big three. Three stocks, three charts, three trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Alan Nuckman, Chief Market Strategist, BullseyeOption.com. Good to see you both. Let's start off with a big name here, and that is LYFT. LYFT's trading around 15.5 or so. Well, why is this one on your radar, Alan?
Well, first off, we've got to back up. Merry New Year to everybody. And what we're seeing here, it's all about price. We're seeing price positive here in 2023. The S&P's up 5%, and the tech sector's up 10% on the new year. So we're getting very close. If you look at the NASDAQ 100, getting very close to 3-month highs. So a lot of positives there. To get into LYFT, this came to me from pricing power. Just on the way to work today, I realized my LYFT was almost $40 just from across town. So they're able to raise prices and get people like me to pay. So LYFT is 65% off its 2022 high, whereas Uber's only 30% off. So it's got a little bit of catching up to do. We also see some bullish divergence, meaning it made new lows, but not new highs in implied volatility. And you're also seeing leverage buying. So the technicals are setting up here, trading between 10 and 15 here for 4 months, and 10 and 20 now with a gap up to 30 above 22. So there's a lot of positives here on this chart. The way I'm looking to play was in the money option, as we talk about here, looking at the July option. It's got 6 months of time, and we're looking at that particular play to obviously to gain in value as this stock moves up with this bullish divergence bottom.
Understood. Okay, so there it is, buying a call. Ben, what do you think?
I think this is a stock that's been rallying on the short term. On the longer term, it's been in a bit of a downtrend, but there might be some room to the upside for Allen. We'll get a look at the daily in just a second. First and foremost, though, well-defined trend higher here. You're looking at the move we've seen from $10 up to $16.30 recently. This is off the December lows and to the highs this week. Bottom left corner to top right. And look at this. Again, a perfect example of that two phases that we're looking for, right? You get the horizontal phase around 10.20, a break to the upside. And again, nothing major here. We're talking about small moves up, but incremental moves up, right? And no retracement, no indication that the working assumption that we're forming value at higher and higher levels has been invalidated at this point. I can see how well, as you look at it, we're kind of a little bit more range bound recently than we had been, right? We've got an upper extreme 1630, a lower extreme 1460 to keep an eye on. Moving away from the hourly candles into those were actually 15-minute, into the daily time frame. You can see this is the move we just looked at from 10 to 16, but a small blip on the radar of the bigger picture here in terms of that trend to the downside we've seen since we're going all the way back to, we're talking 2021, we were up around $68. And look at what we've seen in terms of the move off that spring high there on the left corner of your screen. Now, all the way down to, again, that low we just mentioned, down around $10. And here's what I was mentioning before. You've got 4 well-defined areas of consolidation that have formed. So we're trending lower, right, on the daily time frame. That move we just looked at, somewhat counter trend, but if we get some momentum through the middle of this range, we could open up a door for a retest of the upper extreme. That would coincide with 25. Here's the gap that Alan mentioned, below 30 to that upper extreme 25. So that's a key level. Quick check where things stand in terms of the 50-day, the 200-day. We're above the 50. Look where we are. We're testing the 200-day moving average right now as we speak. RSI expanding to the upside, so supportive of the move up here. It's got legs, to say the least.
Right, understood. So, and it's interesting how you picked this one. I mean, did you look at Uber too, Alan, when you picked the LYFT trade?
Well, I knew that Uber had already recovered some, and like I said, this was a Peter type trade, meaning the fact that trade what you know, and I've been noticing that these Uber prices continue to rise because they kind of got us like they did with cash machines back in the 90s, that we're comfortable, paying a little bit more each and every time. And the Uber is no longer a real good value, but they're making more money for the drivers and for the company, obviously. The option I'm looking at here is a 12.5 call for July, trading about $475. So that gives 6 months of time, and it's only $75 more expensive than the April option. So you're getting twice as much time in the money, deep in the money option, $12.50. And if we fill that gap at 22, then this option doubles in value. So it's taking Peter Lynch to a different level.
Right, understood. Okay, next one, Capco. CCJ. It's trading around 26.98 today. Tell us about your trade, Alan.
Well, again, this is a stock that's been sideways here between 20 and 25 for 3 months. A breakout of that range, which has now happened, targets 30, and it's been between 20 and 30 for 1 year. So this is 15% off its 2022 top, but it's also 400% off its COVID bottom. So there's a lot of momentum here in the big picture. I'm looking at the June 23 call, trading for about 575, again, 5 months of time, an 80 delta here, and looking to see how it can react if it can get to the top end of this range at 30 and then make a move.
Right, understood. Here it is. We're buying a call, this bullish move. Your thoughts, Ben, when you take a look at this one?
Nice move up, Nicole, from 21 to 28. We're talking from December to current levels. But Alan mentioned we're breaking out of a bit of a range we've been in for the last 3 months, up and through 25, but still a lot of heavy lifting for the bulls to do. I'll show you what I mean in the bigger picture when we look at the daily. But first and foremost, you see a very strong move up here. Again, I'm talking about, as mentioned, from 21, talking off that December low to, near 28 this week. You can see higher highs, higher lows, bottom left, top right corner type price activity. And you can also see these well-defined areas of price development, right? You have the horizontal development around 22, vertical, horizontal, vertical. We're talking wash, rinse, repeat is what the bulls are looking for, a continuation of this. But I want to point out, if you're looking at price activity through this lens, it's important to remember that we spend most of the time in that horizontal kind of overlapping consolidation phase. Little time in the vertical phase, but that's the imbalance phase, right? The vertical horizontal value phase is the balance phase. Taking a look here as we pull up the daily time frame, you can see this move we just looked at. There's the range Alan mentioned. We're in a longer term trend up, but here's why I said some heavy lifting still to do, up around 30, 32, but I did want to take a look here at, here you can see a pretty well-defined trend higher again. Even on the daily, you can see these two phases, 11, 13, these stopping points at 18, where we kind of regain composure and establish value, currently forming one around 26 right now. And you can see even how, we've lost some of that momentum to the upside. And this is that wider range I'm talking about. Alan mentioned the break above 25 to this week. Here you can see 32.50 to 18 is really what I've got my eye on. Everything within that, very wide range, and there's opportunity to be had, but not a lot of conviction. A breakout above kind of resumes the trend we've been seeing to the upside here. Taking a look at where things stand. Look at this, above the 200, above the 50, with conviction. I want to point that out. RSI supportive of the move up here. So yeah, this one's had some nice run up here as well, but look at where we are, kind of in the middle of the range right now. Continuation of this pattern opens up the door for retest of that upper extreme. 30, 32 is the area the bulls want to get up above here now.
Yeah, and the bulls get excited when they say, oh, look, we broke out past those moving averages. We can retest that upper extreme there in that chart. That's a great chart, Ben. Thank you for that. Alan, any final thoughts on that one before we get to Southwest Airlines?
Well, I'm just positive on miners and metals, and I think the dollar continuing to decline. You know, the big news that we talk about every single day are interest rates. We're looking at 5% rates here in the futures markets all the way out till December. So we're done as far as the futures markets go. We found that end destination. But then you could see a possible cut in December. A possible cut in rates in December, and then 2024 we're back down to 3.5%, and 2025 we're back down to 3%. So that's all positive for commodities and any dollar-based assets.
Right, okay. And last but not least, Southwest Airlines. What a set of headlines we've had from this company over the last few months. But what are your thoughts now?
Well, sometimes equally as important what doesn't happen as opposed to what does happen. So if you look at this chart, this made new lows in October, all right? We made bullish divergence lows, but we never retested those lows with all of the catastrophe that happened with the airline in December. So technically, if you look at this chart, that's a very positive reaction. We've been trading between 30 and 40 for 6 months. Now, Southwest has pulled back a little bit here today. It's hanging around this 35 level. Now, Southwest is down about 30% from its highs of last year, whereas Jets, the ETF that follows airlines, is only down 15%. So there's more upside here, and it's also 45% off its 2017 highs as well. So again, the play here is a June 30 call, the range between 30 and 40 for 6 months. It's above its 200-day moving average. I'm comfortable being long from 30. That option's about 650. The break-even's $1 above because the volatility's relatively low. And if we just get to the top end of that range, that 40, which is a long ways away from the highs, then that option gains about 70%.
Alan, are you surprised to see that it looks like we're clocking in another winning week again? I just went through the week-to-date numbers. What do you think?
Well, I'm somewhat positive, and that's just my nature. But we've talked about how we had that important low in the overall market back in October. And I listen to your guests before I come on, and they always have to be a little bit glass half empty. And so I think the market has gotten overly pessimistic, and you're starting to see that reflected here. Now, it's important that we follow through above this 4,000 level in the S&P, but if that happens and breaks this overall downtrend line, then you're going to see, a little bit of a price pop. I'm still, very optimistic. And like I said, we're coming to the end of the rate hike cycle. If you look at it in the big picture, after all of this and going from 0 to 5% essentially when it comes to interest rates, the stock market right now is about 300 points off. The S&P is about 300 points off of where it was on March 16th when this whole thing started. So again, that's not catastrophic. The market's down about 7 or 8% from when this started. And this was a very quick hike in rates. But historically, when they start to cut rates, typically the market rallies about 10% in the 3 months after they start cutting rates. And that looks like that's in the future.
All right. Good to see you both. Thank you, Alan and Ben. Alan Muffin, Chief Market Strategist at bullseyeoption.com, and our own Ben Lichtenstein doing a great job with those charts. Thank you both.